JPX Energy Market Weekly Updates. This is the first trading week of the new year. We wish you a happy new year and all the best. So let's start with a glance at the price movements in global energy market over the past week. The daily candlestick chart for both IC Brent and JPX Dubai crude show prices printing doji candles in the last two trading sessions, indicating the upward momentum was likely exhausted. We can also get some useful information from the structure of the market as we have mentioned earlier in our video. We can see from this figure that last week intermonth spread of both Eastern benchmark JPX Dubai and Western benchmark went flat while unilateral prices rebound. This divergence in unilateral price and intermonth spread usually follows price corrections because the market structure, or what we call intermonth spread, is a more sensitive indicator of market fundamentals. More oil supply are returning to the market as the oil price is still high, and it remains to be seen whether the market can absorb these extra supplies. The spread of JPX Dubai and IC Brent has little changed from the previous week's close, while the front-month Brent premium to Dubai exchange of futures for swaps was valued around $3.3 per barrel. On the West of Suez Canal, IC Brent is still supported by supply disruption from Nigeria and Libya, as well as lower loading volume of the Brent basket. But according to a report from Platts, some supply was seen returning in West Africa. Export of Nigeria's Forcados crude have restarted from this terminal, and Libya export are also likely to resume in the near future. And the most recent data from the EIA shows that crude oil production in the United States was not at high not seen since May 2020, though it remains some distance from an all-time high of 13.1 million barrels per day touched in March 2020. On the east of Suez Canal, market focus will be on Iran talks and the resilient market, which appears to be shrugging off concerns over the Omicron variant, as delegates say the OPEC Plus alliance is likely to prove another 400,000 increase in output quarter for February when ministers meet again tomorrow. Since the beginning of the 8th round of the talks last Monday, the main focus of the negotiations was on the removal of the sanctions on Iran, and that's also the largest difference lies in between the US and Iran earlier. Iran's top negotiator said on Thursday the negotiations have made good progress in the removal of the US sanctions over the past few days. Market sources indicated that a good deal could be concluded by end January or February, and today the talks will resume. The market will continue to wait more fresh cues. We can see from this figure, although Iran supplied crude oil to a variety of countries in Europe and Asia in 2017, there are fewer export destinations after the US reinstated sanctions in 2018. In terms of quantity, the sanctions are lifted, the impact on the Asian markets and Dubai benchmark may be larger. On the last trading day of 2001, European gas prices plunged again, falling more than 23% in a single day, with the TTF day-ahead contract assessed at 78.65 and more than 60% in the past 2 weeks. Because most of Europe is now set for warmer than usual temperatures in January, according to the latest forecast, and an expected increase in LNG imports. I think the drop in natural gas prices sets a bearish fundamental for low sulfur grades like Brent relative to Dubai. So in general, the driving factors of the price difference between the East and West markets represented by JPX Dubai and Brent are not obvious in the near future. Pressure on the supply side also comes from the SPR release program. During last week, Japan and South Korea have set a date for the sale of crude from their strategic reserve. For more details, please refer to this diagram. The market expecting China to release more crude from the state reserve amid expectations the second set of auctions could potentially include at least 7 million barrels. While details on volumes and timings are still sparse, the International Energy Agency estimates that the release by the United States and other countries could potentially amount to as much as 70 million, and if released over 90 days, that would equal roughly 800,000 barrels per day in additional supply, and that may put pressure on oil supply balance, especially in the first quarter when demand is low. Given the released SPR volumes include an exchange and need to restock at some point, this will add a degree of market support down the road. Overall, the release of SPR may affect supply and demand in the short term, but if demand continues to recover, oil prices need to remain high to stimulate more supply. Okay, that's all for today's program. Please stay tuned to the JPX Energy Market Weekly Updates.